Thank you. Okay, so the tax liability is another term for saying that's the amount of tax that you're gonna be responsible for paying. You have, what you're determining when you do your taxes is whether you've had your employer pull out enough money to cover your taxes, or whether you still owe more. So what you're trying to determine is if you still need to pay more money or whether you are going to get a refund. So that's what that's saying. So when calculating taxes, how do taxpayers determine if they are due a refund or owe the government money? You're gonna have to pay if the withholding is less than the tax you owe, and you're gonna get a refund if the withholding is more than the tax that you owe. So we gotta think about what this withholding is, right? So the withholding, that is what you have had taken out of your paycheck along the way. So you tell your employer, I want you to take this much out of my paycheck each time I get a paycheck, right? Each month or whatever. So that's your withholding. So that's basically money that you are paying so far towards your taxes. So then you just have to figure out, okay, now we're here at the end of the year and we have to decide or figure out, have I paid enough or have I not quite paid enough? That type of thing. Does that make sense, I hope? Yes, no, kind of, maybe? Okay. So the Form 1040 is the form that you use to fill out, to actually figure out what your taxes are. So if you notice, it says it's a tax return, line by line, it kind of guides you through the process of whether you're gonna owe the government money or whether the government owes you money. So that's what I've got here, whether you owe the government or if the government owes you money. So have you had enough taken out of your paycheck that you have covered your taxes, or do you still have to pay a little bit more? I have put a Form 1040 on Canvas just so that you can kind of look at that and see it. It's not an updated one. I've not had a chance to do that, but there is one on Canvas just if you want to look through it. How many of you all have jobs? Have you all had to file taxes? Who's working in here?
I did work, but
Okay.
I had to file taxes.
Okay. All right. You guys need to become familiar with what that form is. The 1040 EZ form is truly easy. Like, it just tells you, fill in this box, that type of thing. So, but it walks you through the process. All right. Adjusted gross income. So I put a note over here. Adjusted gross income might be equal to what your gross pay is, but not usually. So there's a lot of things that you have to take into account to determine what your adjusted gross income is. So your gross income plus any other income. So remember the other day we were talking about that other form that you use to document if you've earned extra money tutoring or a side job playing in a band or, doing artwork for somebody, those types of things, right? The other thing you have to consider, so other income, but then you also might have interest that you earn from a checking account. You may get dividends, like from stocks. Let me put that in. And on some, like for some people, they may be getting alimony or something like that. So that is other income that you've got to discuss. So if you recall, this was on the Form 1099 that we discussed in an earlier section, right? So there's your adjusted gross income, but then there's gonna be what's considered your taxable income, and that's the amount that you use to go figure out your taxes. So your taxable income is the amount that's used in the tax schedule. Thanks, RJ. Okay, good morning.
Wait,
All right.
Can you go back to what is the amount used?
Yep,
And
the amount used where you're gonna go to your tax schedule. So remember, we used the tax table and then we used the tax schedule. We used both of them so you could kind of see the difference in how you know, like if it was greater than this amount and less than this amount, and we used that particular table, right? But then there's also the tax schedule where you pay this set amount plus 22% of the amount that you earned over da-da-da-da. So the taxable income is the value, is the amount that you're gonna use when you start looking at all of the tax documents, okay? So to figure out your taxable income, you're doing your adjusted gross income and then minus any deductions or exemptions that you get. Okay, so this is the amount used to calculate taxes owed. Okay? All right. So everybody can take what's referred to as a standard deduction, or you can take an itemized deduction. So if you donate a lot of money, if you give to a lot of causes, that type of thing, medical and dental expenses, mortgage and interest, those are some things that you can use if you are doing an itemized deduction. But for many people, especially over the course of the last few years, they've adjusted what the standard deduction is, and it makes it a lot more appealing to just go with the standard deduction as opposed to going through all of the paperwork that you have to do an itemized deduction, because itemized deductions is just as it sounds, like you have to list every little thing that you have done, and that can get time consuming, and it's a lot of paper and process, right? Okay, so let me kind of talk through some of this, sorry. Okay, so standard deduction is an allowable reduction on the tax forms that is based on your filing status. So remember, we had our filing status of single, of married filing jointly, married filing separately, the widower, we have all of those different statuses. So these amounts are set by the government, and they do change along the way. And there was a change a while back that raised what the standard deduction is to make it more appealing to just take the standard deduction rather than do the itemizing. So the current standard deduction is $12,550 for single or married separately, and then $25,100 for married or qualifying widower, and then $18,800 for head of household. And yeah, that is on your reference sheet. So the standard tax deductions are on your reference sheet. Yeah. And I've got to check something on that. Mental note to myself. All right. You can do itemized deductions. So if you notice, kind of make a mental note about what you can use as itemized deductions. So if you're making charitable contributions, you can write off a certain amount for medical and dental expenses, for the interest that you pay on your mortgage. So there are quite a few different ways that you can have deductions. Obviously, you're going to take the highest deduction that you can, because that is going to reduce what your taxable income is, so then you would pay less taxes, right? Does that make sense? So you take whichever is more. So if you figure out that your itemized deductions are more than what the standard deduction is, then obviously you want to do the itemized. But if if they're pretty close, or if the standard one is more, then obviously you're gonna take that, okay? All right, a little bit more about those deductions. So it's gonna reduce your taxable income, and that's what we're worried about. That's the bottom line in terms of where we're looking on our tax table or on our tax schedule, right? So you deduct these from your total income before you figure your taxes, right? So just as we put up here, right? Example of tax deductions, it could be charitable donations. It could be the mortgage interest. You all have probably heard you can make contributions into, a lot of people for tax benefits, they make contributions into their retirement funds to kind of offset some of that. Tax credits are things that reduce your total tax due. So think about that for a second. Think about what that's saying. You deduct, if you have a tax credit, you deduct that after you've calculated everything else. So that's kind of the tricky part, is remembering that those tax credits happen. You're basically paying the tax on that, but you deduct that from the total tax that you owe after you calculate everything else. So tax credits could be from the big one that I can think of is, a lot of people, I don't know if they're doing it anymore, the electric cars, you were getting a tax credit. If you, on your house, if you get solar panels, or if you get energy efficient windows, that type of thing, if you can show some of those types of things, those are gonna be tax credits that you can use to help with the overall cost of your taxes. So energy tax breaks is the big one that I can think of. There are probably more out there, but that's the big one that I can think of. I'm trying to look at other notes that I have here to see if there's something else I feel like I really need to share, but probably not. So, onward, let's take a look here. Okay. Grab your calculators, please. All right, William's employer withheld this much in federal income tax, so that's how much he asked to have pulled from his, like, he pulled some each month, that type of thing. So after completing his return, William determines his tax responsibility is this much, so will William get a refund, or does he owe the IRS money? So you want to look at how much he owes compared to how much was withheld. So in this case, what was withheld is greater than what he owes, and so he's due a refund. Right? So his employer pulled more money to pay his taxes than he really owes. So he's gonna get that money back. So $13,956.95 minus that $11,874. What does that get us? A refund of $2,000, 82.13. Okay, does that make sense, guys? Yes, no, kind of, maybe? Okay. All right, Ralph is a teacher who works as a musician on the weekends. His tax worksheet includes wages from teaching, wages from his music job, interest earned, dividends, and royalties. So total income, so that means you are truly just adding all of that up, right? your adjusted gross income is you add all of the different incomes that you had. And if you add all of that up, you should get that 62,160.02. Okay. All right. Mindy, who is head of household, so let's keep that in mind, made $49,000 last year, but also paid $1,300 in real estate taxes. That's deductible. Paid $6,400 in mortgage interest. That's deductible. Made a pre-tax contribution to her retirement account. Deductible. She also earned a $1,500 tax credit when she replaced her windows. Use table Z on page 2 of your notes. Actually, it's at the, oh, no, it is. Let me find my other part of my notes. I tucked those away because I didn't want to get distracted by them, and then I forgot I need them. Okay, so flip back over. We've got some figuring to do, but then go to that head of household table. Okay, so total itemized deductions, so that's gonna be this 1,300 and this 6,400 and this 3,000.
Wait, why don't you include the 1,500 in that? You own that.
That's a tax credit,
Oh, okay.
so we're gonna deal with that at the end. Okay, so that, our total itemized deductions, this should give us 10,700. And so then the question is, should she take the standard or the itemized deduction, and why? So for head of household, what's the standard deduction? $1,800, and so that's more, obviously, than the 10,700. So she should do the standard. Because it's more. Okay, so then we are doing, what that means is that we are doing this 49,000 minus the 18,800. And so her adjusted taxable income is 30,200.
Wait, why would you want the larger one if they're gonna lose more money?
No, what that's doing is reducing what her taxable income is gonna be, which puts you in a higher place on the table, which means lower, really.
Oh, okay.
Okay, so the higher the deduction, the lower
Tax.
the taxes. All right, so using this table, what we're looking for here, we're looking in that second row, if you notice, because her income, what we're looking at is this 30,200. So if you look at this little tax schedule here on page 2, notice how that works. We're looking, so it's that second row because it's greater than 14,000 and it's less than 54,200, right? So that means we are doing
6,200.
1420. Oh, hold on. Where are you looking?
Well, don't we, when it says the tax is, and it's asking what is her tax, so we're
Right.
gonna do that section?
Yep, but make sure you're in the right row.
Oh, I went.
You went one
yeah.
down. Yeah, so 1420 plus 12% of, and then we have to do the figuring. What was that number again? Where is it? 30,200 minus 14,200 from your table. And what does that give us? Let's see. That gives us $3,340. Okay. So that's the tax that she owes, except now, Riley, is when we deal with this $1,500 tax credit. Okay, so that's the tricky part, is remembering, okay, this tax credit means, okay, we have $3,340 at this point that she owes, only now we take away that $1,500. So now she really only owes $1,840. Okay. Kind of nice to have those deductions and stuff, right? Kind of makes you realize. Okay, questions on that? Okay. All right, so for this next one, Katrina is a widower. So we've got to make sure we're looking at the right place in the table for that. Total income before deductions was this. After completing her 1040, itemized deductions was this. Employer withheld that. Should she take the itemized deductions or standard? Should she get a refund, or does she owe the government money? How much? And then we're gonna use this table here on the same page as before. Different table, but same page. Okay, let's think through this. So we've got to figure out, so her total income and then minus our deductions. So that's gonna be this 108,790 minus this 26,500. And that gives us 82,290. Okay, so that's her taxable income. That's what we're gonna be looking for. Okay. Let's put a note, taxable income. Okay, then we need to figure out how much she owes. So based on this 82,290, she owes, if you notice, it's gonna be, in the table, it's 93,28 plus 22% above. So we've got to do 82,290 minus this 81,050. And if you do that math, God bless you. We get 9,680 cents. Yep. Okay, so that's how much she owes in taxes, is this 9,680 cents. And she only had withheld this 8170, so she owes money, right? So she owes still we've got to do 9,680 cents minus 8170. And what does that give us? 1430 and 80 cents.
Wait.
Did I do that right?
What did the 8170
The 8170 is what was
come
withheld.
Okay, got it.
So that's what she's already contributed.
Got it.
Wait, does withheld
Towards
mean
that.
like she's withholding or the bank is withholding?
Remember, your employer is socking money away from each of your paychecks
Okay.
towards paying your taxes.
Oh, and she
So
doesn't
the
get,
withheld-
she doesn't get the refund.
She's not getting a refund, she owes money, so ideally, you don't wanna be too much either way. So it's a fine balance of trying to figure out how much you should have withheld. So, yeah, quite honestly, I have to go make a run to the Human Resources Department and talk to them about adjusting what they're taking out and how much they're putting into my retirement accounts right now and how much they're taking out of my paycheck. Well, I end up having to do it every year, but it's just you kind of try to play this game of balancing so that you're not ending up having to pay way too much money at the end or get too much money back.
Okay.
It's kind of a balancing act. But yeah, so this is money that, the 8170 is money that she's already, that her employer has put away for her to pay for her taxes, but it's not quite enough, so she owes more money. Okay, does that make sense, guys? Questions? It's kind of you just have to kind of think through methodically, okay, let's figure out what the taxable income is gonna be, so you do your formula for that, and then you have to figure out your tax liability, and then figure out whether you're gonna be paying money or owing money. Getting refunded money. Okay, one last example, and then I do have some problems I want you to try from the workbook. We can go through those, and then I will get you this worksheet, okay? All right. Yes, warped humor, if you notice. Jill and Jack are married and filed jointly. Okay, Jill's adjusted gross income is this, Jack's is this. They plan to take the standard deduction. Jill's employer withheld that much, Jack's withheld that. Should they get a refund or do they owe government money? How much? So we're gonna use this same table on page 2, okay? All right, so taxable income. Let's do that first.
Wait, what? Oh, never mind.
Okay, so for taxable income, we're gonna have to add the 40,675 plus the 42,802, right? And then we're gonna take away the deduction, remember, right? So the deduction is, I never remember, 25,1?
It's,
Yes, 25,1. Okay, I should have been looking here. Okay. So this is the standard deduction for married filing jointly. So we get 58,377. Right? Hello.
hi, can I come learn something?
Oh, we're just about done with, we're doing taxes.
Oh, fun!
Not quite, but, not really, but,
Have you done the stuff in the windows yet?
no, that's for fifth period.
Okay, all right.
Yeah, that's not for this class. Okay, so tax liability. So that's figuring out, we gotta figure out how much do they owe in taxes, right? Let's do that. So we've got to look, we're looking at the table here, right? This is page 2. So 58,377. So find that. Find which row we're looking at there.
I don't.
Do you see which one? You know what? Remind me, because when you're looking at this, you ended up looking at the wrong row. Remind me to give you a piece of paper so that you're looking straight across.
I just thought, this is married, file jointly,
Yep.
or qualified, but aren't they doing separate?
No, they're doing jointly,
Oh, okay. Then,
okay?
okay.
But visually, if you're having a hard time seeing those different lines, remind me, I want to give you like a Post-it note or something to put on there so that you're not skipping a line.
Okay.
Do you know what I mean? Okay, so where are we? 58, well, yeah, kind of row, it's actually row 2. The first row is that there's just not
Oh, yeah,
really
yeah,
that,
that's
there's
not-
no tax there.
That's what I'm.
So, yeah, so we're greater than the 19.9, we're less than the 81.50. So that means we are doing, for our tax liability, we are doing 1990 plus 12% of, and then we're looking at what our total was here. So 77 minus, what's the amount they say there? 19,009. All right. Do we see where we're getting all of those numbers from? It gets busy here with all of the numbers, doesn't it? 6607.24 is what we get for that. Yikes, that's messy, sorry. All right, so that's how much they owe in taxes. Now we have to figure out how much they've actually paid in the taxes, right? So they have paid, they had withheld, maybe that's another, let's put that little reminder there. So they have had withheld, what is this? Let's see, 3554 plus 4045. And so what that total, let's see, is 75.99. So that's how much they paid. So now we need to compare, right? This is how much they paid. And, I'm sorry, that's how much they had withheld. And this is how much they actually owe. Let's make a note about this. This is what they owe, and this is what they paid. Exactly, right? Yep, so, yeah, so they get a refund, right? Yay. And that refund in this case, if we do the math, is $991.76. And they're going on vacation. No,
Going to the beach.
yeah, exactly.
You're just subtracting those two, right?
You're subtracting those two, exactly, right? So what you've paid minus what you owe to figure out your refund, okay? All right, I want you to try some of this. You've got to kind of get comfortable. I'm going to get you a Post-it note to help you, Brianna. Come grab your workbooks. It's page 105. And I want you to try those 3 problems, work with each other, and we'll go over those shortly, okay?